Hello everyone and welcome back to our weekly educational video. Thanks for attending the webinar and to start trading with OneRoyal Broker. A quick disclaimer before starting. The information provided in this webinar is for educational purposes. Please do not take them as a financial advice. Do your own research before start trading or investing. Okay, so the topic of today is understanding trend lines. So what are trend lines? What is the theory behind trend lines? How to draw them, the best practices, and for sure we will go to the MT4 to show you some real examples. So what is a trend line? As per Wikipedia, a trend line is a line drawn over pivot highs or under pivot lows to show the prevailing direction of the price. So we will use trend line to know how the market is moving, either to the upside or to the downside. So if we look to the right, you can see, let me use the pen, sec. So if we look here, we can see that we draw this trend line based on the pivot lows since we are in an uptrend, so we will use the lows. When we are in a downtrend, you use the highs to draw your trend line. Okay, so if we have an uptrend similar to this here, case number one, the market is in a clear uptrend. However, if we have a downtrend, similar to here, like by linking this, if you see the market is moving to the downside like this, as obviously as simple as that, we are in a downtrend. So the trend lines show us mainly the direction of the trend. So in an uptrend we link the lows, in a downtrend we link the highs. So here we have also lower highs and lower low. This is a low and this is lower low. Here high and higher high. Obviously here we have low and higher low after it. Okay, so this is mainly what we use trend line for. They show direction and speed of price and also describe patterns during periods of price contraction. Also, they are known as diagonal or dynamic support and resistance. Why they are called as dynamic support and resistance? As you remember, we had a lesson about the support and resistance. In a support, every time the market reach the bottom, it will be rejected. And similarly, in an uptrend in an uptrend line. So in a downtrend, every time this is a support, every time the market reach this area, it will bounce to the upside. Similarly, in an uptrend, the market each time reach this area, it will bounce. So this is why we call it as a diagonal support or even a dynamic one. It's not a horizontal, it is little bit inclined, so it is a dynamic one. Similarly, when it comes to a dynamic resistance line or downtrend line resistance, so here every time the market reach the trend line, it will be rejected to the downside. Okay, so this is why we call it as a dynamic or diagonal resistance line or support line. Used to recognize direction price, we talked about this. The idea is that every dip in an uptrend, so we have here moving to the upside, a dip. This is, we call it a dip. First dip, second dip. Every time the market dips, it will be rejected and it will move to the upside. In a downtrend, we have a bounce, first bounce here and second bounce here. Okay, so every time the market bounces to the trend line, most probably will be rejected to the downside. Okay, so you can use the trend lines to come up with trading ideas around those levels. A small note, price does not always conform to trend lines, but when it does, they can be very effective. So as anything in trading, nothing is certain. What we look for is how most probably the market will react when it will approach an uptrend or an downtrend. In an uptrend, most probably will reject it and it moves to the upside. In a downtrend, most probably will be rejected and it will move to the downside. So always you should think in a probabilistic way. What is the theory behind trend lines? Trend lines in simple terms shows where supply and demand probably, not definitely as always, we said why, exist. So going back to our supply and demand session or support and resistance, let me remove this like this. So every time the market reach, as you remember, a resistance will be rejected most probably to the downside. So we call this a supply. And every time the market reach a bottom or a support, sorry, this is a resistance here, this is supply, it will be rejected to the upside. So this is why they are known for as supply and demand. So this is supply, let me do this so you will not be confused, and this is demand, okay, or support. So once the market reach this area, everyone needs to buy. This is why I call it demand, and everyone, when the market reach this area, everyone needs to sell. So there will be a huge supply. So this is why they are called supply and demand. And this applies similarly in trend lines. So in fact, when the market reach this zone in an uptrend, there will be a huge demand here. So the market will move to the upside. Similarly, when it reach back again another time or touch the uptrend, there will be demand here, demand. So once the market reach this area of the trend line, most probably it will be rejected and will move in the same direction of the main trend. So the main direction is to the upside. Once we have a dip, the market will be rejected if it touch the trend line. So this is, we call it, we can name them as a demand zone. So this is why these areas works, because they are a definition of a demand and supply similar to support and resistance. Similarly, in a downtrend, this should be a supply zone, because every time the market reaches this area, everyone here needs to sell. So we have a huge supply, the market drops. Here we have a supply, the market touch the downtrend, so the market will move to the downside. So they work as that because they are simply a demand and supply zone. So in my opinion, therefore, they should be called supply and demand lines, because this is more accurately reflects the logic behind that. Supply and demand of the instrument question drive the market price. So whenever you trade, guys, keep in mind that trading is all about supply and demand, or a fight between sellers and buyers. So whenever you have an area of confluence, whether it is a supply and demand, trend lines, or whatever you would like, thinks who will win the fight and how most probably the market will move. How to draw trend lines. The best way to draw a trend lines is by using the wicks. So you remember in a bar we have wick, body, and then a wick, or these are called as well as shadow, the line to the upside or to the downside. So let's stick to the name of wick. So to draw your trend lines, you should use either the low of the wick or the high of the wick. This is the most accurate way. What you need more is at least 3 touches or 3 points. 3 points to be able to come up with a trend line either to the upside or to the downside, and better to use them on the higher time frame. What I mean by this, so if you are a swing trader and you use the 4-hour time frame for your execution of your trades, you should plot your trend lines on your daily time frame. Okay, so use the higher time frame to plot your trend lines. And this applies similarly when we talk about support and resistance. Always the higher time frame lines or support and resistance are more efficient than the lower ones. So trend lines, what we need to summarize here, or the best practices, trend line should be drawn from the outside of the quotes through the lows or highs. So we talked about this. You use the low of the wicks or the high of the wicks. Uptrend should be below the quotes and downtrend line above them. Below the quotes and downtrend line above them. Trend line cannot be drawn using the current market price. So this current market price is not used to draw a trend line. You will use the historical lows or the previous lows and highs. Don't use the current market price. This is a common mistake in technical analysis. Trend line should be drawn using the tails. We have mentioned this, not the body. So I will redraw this. So this is the body and this is the wick. Use the higher end of the wick or the lower end of the wick. It depends if you are in an uptrend or in a downtrend. Remember, when you are in an uptrend, you use the lows. When you are in a downtrend, you use the highs to draw the trend lines. Consider the slope. If a trend line is too steep, it will not be sustainable for long. And this concept is called as buy climax and sell climax, or parabolic move. So whenever the market is moving steeply to the upside, this is not good for the uptrend. Let's say, an example, if the market is moving aggressively so steep to the upside, this is not really good. And even if it moves little bit in a flat way, this is, or in a shallow way, going little bit flat, this is also not healthy for the uptrend. In the middle is the best way to see the market moving or the trend moving to the upside. This applies similarly if we're talking about a downtrend. Okay guys, it's not just for the uptrend, we're talking about both ways of a trend. So if the market moving to the downside, it's not good to see it moving so aggressively to the downside with a steep slope. Even if it's go a little bit sideways to the downside, it doesn't look good. It's more like sideways market. Better to see it like this, between those two movements. This is more healthier. This is wrong. This is not wrong, but this shows that most probably there will be a reversal, either in this case or in this case here. Higher the time frame, have more reliable trend lines. We talked about this. If you are a day trader and you use the 10-minute or 15 minutes for execution, you can use the 1 hour to draw your trend lines or support and resistance. A trend line is stronger after more touches. So the more touches we have, the better for a strong support or uptrend. We call it support line or an uptrend. Okay, so the more touches we have, the better. But also this could be a close, or we could be closer to see a breakout to the downside. Okay, so the better the touches make it more stronger, but also there will be a huge probability that we will see a breakout. Okay, so let's go now to the MT4 to show you how to draw these trend lines using this platform, the MT4. So here we have the Euro CHF. Okay, so to get the right tool, you go to this section here, and you use trend line. So what I will do is I will link, we have this first low here, okay? Clearly we are in an uptrend, okay? So we have higher high. It's easy to know that we are in an uptrend. And higher high and higher low, higher highs and higher lows. So this is an uptrend. What you will do in this case, you saw that you are in an uptrend. You will look for 3 points, okay? So this is our first point here. You can use this as a second point, and this is as a third point, okay? So the market, each time it reach this dynamic uptrend, we have a move to the upside. So this is a demand zone, demand zone, demand zone. Every time the market reach this trend line, it will be moved to the upside until we have a breakout. And here we have a huge supply which led to an aggressive move to the downside. And then we have a change of direction. So you can use the trend line to know the direction. So here we have an uptrend, and once we have a breakout, then most probably we will have a change of direction. Okay, but trend line alone, to use it for change of direction, is not enough. You need to combine it with other indicators. Okay, do not use one indicator to come up with trading ideas. You need at least 3. So here, once we have a breakout, there was a change of direction. So you can use it for two possible way. Either to know the direction. Here you use it first when the market is moving to the upside, so it showed you we are in uptrend. And once we have a breakout, most probably we will see after the breakout a change of direction, and this is what happened. Move to the downside, a huge or a deep correction, and then a move to the downside. Another example, but for a downtrend, if we go here, we can see that the market was moving to the downside, high, lower high, lower high, lower high, low, 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 lower, low, lower, low. So we are in a downtrend. So what I will do is I will put my trend line by linking 1, 2, 3 points using the wick. Okay, here the wick is so small and here is so small. This is more obvious here, so I use the 3 points here. Okay, we have one here, one here. Okay, and I will add one, which is the first one. One second. Okay, so 1, 2, 3 points, and we have a trend lines. So if we look at this trend line, it is obviously we are in a downtrend. So this is one way to use the trend line here. Once we have a breakout, we have a change of direction. So here we have a breakout, and then once we have a breakout, the market change direction. Okay, but I remind you that trend line alone is not enough to know where the market will reverse and move to the upside by using just the breakout. You can combine it with support and resistance. Let's say here we have a strong support using this low here. Okay, so I combined the trend line with a support which led to a move to the upside. Here we have higher high, higher lows. So yes, this is how you draw trend lines using the wicks, 3 points, and use them on the higher time frame whenever you want to plot them. Okay, so this is it for our today's session about trend line. If you have any question, please drop it on the chat so I will answer them before leaving. Most welcome, Name, Jaja. If you have any question, let me know, please. Anything related to trading, I can help you with it. Okay, this is it, guys. Thank you for watching the webinar, and see you next week. Have a happy trading day, and goodbye.